but really crazy week, a lot going on. But to me, if you had to ask me, was the biggest story of the week thus far. I think hands down, Mastercard. How it partnered with Bakkt to offer Bitcoin and credit services to their customers. Now, why is that such a big deal? You're looking at Bakkt, which has become a huge player in crypto, cool digital exchange and a platform which was spun off from Intercontinental, which owns the New York Stock Exchange. Interesting when you see the trails of the companies getting into crypto. Then you had in March, Bakkt signed a partnership with Starbucks where you can use Bitcoin to pay for your coffee. They also convert loyalty reward points into Bitcoin. Then on October 8th, signed a partnership with Google where Bakkt users can add their virtual Bakkt Visa debit card into Google Pay, which is going to allow them to purchase anything, anywhere where Google Pay is accepted. I mean, you talk about literally millions of businesses and over 10 million users. And now you throw in yesterday's announcement, which is before they open, for MasterCard. Now, why do I think this is such a big deal? MasterCard has 2.8 billion cards issued and has a relationship with over 20,000 financial institutions around the world, including almost every one of the largest 100 banks, if not everyone. But the 2.8 billion users, 2.8 billion, this is what you need to understand. Let's say if just 2% of these people, which amounts to 56 million, decide to use their reward points, get through the millions of programs offered in retail stores. You guys know what I'm talking about. Everyone's like, let me get you email for points or whatever. This way you come back in. But 56 million decide to use their rewards, only 2%. That amounts to 56 million, and they convert them into Bitcoin. So this is not people using cash, but their points and rewards, which basically sits there offering no interest. And yes, you can use it for whatever and discounts and $20 here or there off whatever order, clothes, whatever you're using it for. But now you can use it to purchase Bitcoin. So 56 million people, to put that in perspective right now, as of September, only 46 million Americans, which amounts to 22% of the adult population, own Bitcoin. And its market cap for Bitcoin is over 1.1 trillion, which nobody throws Bitcoin in that $1 trillion club. I think it should go in there, right? Along with Microsoft, with Apple, Facebook, Google, Amazon, Tesla, right? There's 6 of them, and you have Bitcoin. There you go. But essentially, you're going to double the market. And maybe some of these 56 million people already own Bitcoin, of course, but we're seeing a massive influx of new buyers into the crypto markets. And when we look at companies like MasterCard, and I'll throw JP Morgan in there, and these guys are kind of late to the party when adopting crypto. You heard what Jamie Dimon said, and Bitcoin, whatever. It's a fraud, it's garbage, whatever. Tulips. Now they're both going all in, saying, hey, you know what? This is what our customers want. I love the way they put that. This is what our customers want, which is true. Their customers do want it. But you know what else your customers want? Every single one of them? They want to pay less fees in terms of financial transactions, wiring money, sending money around the world. Plus, with crypto, also faster transfers, more safety using a blockchain. So the reason why you're getting into crypto, your customers want. But the real reason why, and offering services now, is because you have to, since this is a legitimate threat to your business model. And if you don't, you risk becoming the AOL of the financial industry. And there's a real reason why you need to accept crypto as a financial institution and adopt it. It's here. You have almost every large financial institution integrating Bitcoin on their platforms. Morgan Stanley, Goldman Sachs, Citigroup, UBS, BNY Mellon, Barclays, Fidelity, Standard Chartered, PayPal, Square, Visa. the Bitcoin ATM machines everywhere. I'm seeing them everywhere. I travel, I go to hotels, I see them everywhere. I take pictures of them, post on my Twitter at Frank Curzio. Those ATMs are provided by NCR, by the way, which is the largest ATM manufacturer in the world, and has over 650 banks as partners, rolling out ATMs for Bitcoin. But when you look at Bitcoin, it's real, it's exciting, it's still very early in terms of adoption, where 20% of adults in the U.S. own it, limited supply, which makes it inflation hedge and store of value, two classes for investors who buy and hold shit forever, right? That's what they do. When you look at it as something as an inflation hedge, store of value, look at gold. People, they hold it forever no matter what. It's a good sign for Bitcoin. It's a great play in endless money printing. I'm so sick of politics out there, I think, on both sides. Also a great play against Wall Street. That's just disrupting everything. And look, I don't know where Bitcoin's going this year. People say it's going to 100,000. Some say it could go to 250,000. We're pretty close to the end of the year. 250,000 a little crazy. Some say it will retest the lows of 39,000 after hitting a double top. I mean, I don't know. I'm not going to, pretend I know what's going to happen. But I can tell you, likely it's going a lot higher over the next 24 to 36 months. That's what I care about as an investor. And that's not a long time. I think it's going a lot higher longer term. As you see, more and more people adopting this. It's still very small in terms of 45 million, 20%, 22% of the population. Now you have all these reward programs, all these people going into it. And this is just happening over the past month. It's opened up tremendously. But what you need to realize, as Bitcoin surges and goes a lot higher, you're going to see even more money, especially institutions, force their way into the crypto markets. They have to allocate money to it. And they're going to allocate money into the fastest growing segment within crypto, which is DeFi, an $80 billion industry. Already, it's growing incredibly fast. Goldman Sachs already filed for a DeFi ETF. The company reported $13 billion in sales. They're not going to do a DeFi ETF unless this is a massive market, or they believe it's a massive market. And NFTs, you look at almost every legendary athlete and celebrity is in this trend, which means the billions of people following them on social media are hearing about it every single day. That's why it's getting widely adopted. Is there a lot of garbage in this industry? Absolutely. But there's also a lot of cool stuff in the industry. And then you have security tokens. Trading platforms open like crazy. A lot of fun right now. Hundreds of millions being raised right now to launch new security tokens. Tons in the pipeline. We know we got good connections. And why is that? Because there's over $500 trillion in liquid assets that become tokenized. And all of it's not going to become tokenized, but 1% is $5 trillion. How big a $5 trillion market is? Take your 5 biggest trends that you know of. EV, marijuana, cybersecurity, whatever. Bigger than all those combined. But you're looking at disruptive trends. How do these happen? This is something I've followed throughout my career. Because getting into these trends early, you could buy the crappiest company and make money on it. But how does it become disruptive? What's the process? Because you do have so many different stages, like the original idea stage. Hey, that's a great idea. That's awesome. That sounds pretty cool. Let's try to, build on it a little bit. Things like, let's build a little infrastructure. You start building the platform. Then you look at the regulations of the market. How the regulatory authority is going to regulate the industry. You need to figure that out. I mean, that's going to filter into how much capital you raise. If it's hard to get into an industry, and that's what happened with security tokens, there's just nothing going on, and few people want to invest in something that they're not sure of. Now the market's opened up, the regulations. Again, we want to get more certain on those regulations, but we are going to go to securities here. Because a lot of these things trading on all these platforms in crypto are securities. They're going to have to list securities. That could happen now, 6 months, 2 years from now. That's going to result in an explosion in security tokens. That's why you're seeing so many of these platforms develop, and another one just raised $150 million. A pure security token exchange. Not a trading platform, an exchange. That's it. When you have the capital raise stage, that's when capital comes in. But the ultimate confirmation is the institutional adoption. To where the biggest players are running into the industry. Like we saw big data, cloud, AI. They weren't really getting it in 2011, 12, 13, but you saw the money continue to filter in. And once you see that, once you see the big more money pouring in, that's the money from institutions that have what? What do they have? Huge political connections. Huge connections on the regulatory front. So when they're investing, they know that, hey, this is for real. When Goldman says they're launching filing for a DeFi ETF, that's them going to all the guys that worked at the SEC that now work for Goldman, all the politics and everything. Hey, is this going to work? What do we need to do to make this work before they make that announcement? They don't just say, hey, let's do this and then talk. No, absolutely not. But once you see that, the institutional money coming in, that's the confirmation that the trend, hey, this isn't some little fad. This is going to go away. It's getting adopted, and the opportunity to make a massive amount of money is real. And look, that's what we're in crypto. I mean, Bakkt, it's publicly traded, BKKT. I looked at this stock. It's very, very small. Was small, but the stock was $10 on Monday at the open. And announced a deal with Mastercard. The stock went up. Went to like 20, like 17, 20. I saw 13, 15, 17. And the next day, I didn't even know it closed up. It closed up 200% to $30 yesterday. Today it was over 40. I don't know where it is at the close or when you're going to list it. It's over $40. I'm not telling you to buy this. Again, they research on it. They're doing 1 million sales right now. And it's, again, the market cap is inflated tremendously. But the growth potential is there. And that's what people invest in. That's what drives that premium. And you're really going to justify the fundamentals with Tesla? I mean, 100,000 cars for Hertz. When will they get delivered? Who knows? $1 trillion valuation? There's no way you can come up with a valuation for that. But the excitement is, hey, these guys are the major player. They're going to continue to be major. They're going to grow forever and ever. So once you have that within your stock and you're in a massive growth industry, these things take off. And that's what you're seeing across the board. I mean, not across the board. There's a lot of crap tokens out there. But, Bakkt is an actual stock. It went up tremendously. But that growth potential is there for them. I mean, signing partnerships with the biggest payment service companies in the world. Visa, MasterCard, Google Pay. Next thing you know, stock's off to the races and it doesn't take long. This is what I'm talking about. The crypto, this is the very early stages of growth, especially when looking at DeFi, NFT, security tokens. And look, I talk about this a lot. I'm not going to turn this into a crypto podcast. I cover all sectors, all technologies. I'm going to always provide great interviews from experts across all sectors. But right now, this is the biggest opportunity I know of. When I say big opportunity, I'm not talking about institutions. I don't care about them. I used to work for them. I'm talking about retail, mom and pop investors, where you can generate Wall Street-like returns. Since the crypto market is one of the few you'll see where you can invest in ahead of Wall Street and get in on some of these great technology and companies on the ground floor. Not after the valuations are inflated through a SPAC and an IPO. Holy cow. A lot of that growth has already taken place. Yes, you can make money on those things. But that's what has me so excited.